Hi guys, welcome back. Things are about to get much worse for Bitcoin in the imminent short term and also into the midterm. I will show you exactly what overnight has changed that we need to pay attention really closely now what's about to happen. I will show you what I found and let's go. Guys, thank you so much for tuning in here again. You know the drill. Everybody that is here, smash up the like button that more people see this video. That's potentially one of the most important videos that I have done in a really long time. So the more people see it, the better. Let's directly jump into here, into today's content. So you see the dollar is bouncing back to the upside. We got here a mechanical bounce from the 98 points level. But that we are rallying here to the upside like this has a really specific reason about a news event that happened in the last couple of hours. Because we would otherwise not see such a dramatic pump here in the dollar right now. And this, I don't have to tell you this, not good for risk on assets, for Bitcoin and the crypto market as a whole. So, but what did change here in the last coming hours? So what changed was that we got basically already a front run of the rate hike decision in Japan. So the head of the Bank of Japan came out and said, we are definitely gonna hike, and we're gonna hike afterwards, most likely again, and afterwards again. So they are on a trajectory to keep hiking on every rate hike decision in the upcoming months. So, and there's one major problem with that, and that's the part that I'm gonna read you here. The short-term overnight interest rate swap market in Japan has already priced in a high chance of 94% that the Bank of Japan will hike for the second time this year, and then in brackets within its current gradual normalization monetary policy stance by 25 basis points this Friday. So on the 19th, to bring the overnight policy rate to 0.75%, the highest level in 30 years. And that is the big problem here right now that we are facing, the highest in 30 years. Things will start to break when we actually get the rate decision in the next 48 hours. And that's why you see things like the dollar prematurely already running to the upside, because people now shifting into safe havens to minimize their exposure to the volatility that will come when the rate hike decision is set in stone on this Friday. But it's basically already happening right now because this news broke earlier today. I think the earliest point today was like 8 hours ago. 8 or 9 hours ago was when that actually hit. So, and here a move on Friday would cement the BOJ's status as the only major central bank raising rates this year. It would also mark the first instance since the BOJ adopted its two-day meeting format in 1998 that it and the Federal Reserve move policy rates in opposite directions within the same month. So this is not good, guys. So I'm gonna show you now what I believe is going to happen over the next following days when the rate cut decision, I'm so set in my mind with rate cuts from the US that every time when I want to say rate hike, I say rate cut. So when the rate hike is coming, Bitcoin is risking to move all the way down into this green box here, to the 200 weekly moving average sitting at $68,000. So that is a $20,000 move to the downside. That is over a 20% drop to the downside here. So here, yeah, 21.5% they will potentially risk here to fall. There is one level that can prevent us from dropping into the 70,000s and potentially even touching the 200 weekly moving average, and this is here, this dotted line, $77,700. But if that here is not holding, or only short for a short period holding, like we bounce from here and then form another bear flag, then we're still risking to break down here to touch this before we then get a major bounce back in direction of $100,000. So this would have been all not happening, and we would be on a whole different trajectory if the lending market in Japan would be healthy right now, but they are not. And this is the big problem that we are facing here. So, and from I'm gonna show you some levels from where I'm considering taking shorts. For, yeah, it's a long time. It's a long time that I'm thinking about to, or actually going to short Bitcoin. So here also, I had now a look on multiple higher time frame charts. Here on the weekly chart, this upward sloping parallel channel that Bitcoin was all the time within its uptrend and creating all-time high after all-time high has now officially broken down. And I don't see Bitcoin here in the near future reclaiming this channel, because a reclaim needs to be to push Bitcoin to like $114,000, potentially even here to $117,000. In the next coming weeks, I don't see this. I don't see this happening at all. And one major reason for this is that this here is now a proper bearish order block. So, and when you have a bearish order block, what usually happens is that you get continuation to the downside at some point. So once we are breaking here $83,500, that low here of that candle from 2 weeks ago, that will be the signal that we will continue to break here into lower levels. And that's what I'm currently watching. But there are levels earlier from where we can actually take a short if we want to short here. So in one of these levels is $86,300. So if we fall out here, out of the golden ratio, that's right now the only reason why Bitcoin is still holding on here to the mid 80,000 and the almost $90,000 level, close to the $90,000 level, is that Fibonacci golden ratio here. So once we are losing this, even on a daily time frame is enough. You know, if we close the daily candle below this level here, that is where I open my short, and then my stop loss will be the top of the current weekly candle at $90,000, because it will become highly unlikely that we are going to see Bitcoin pushing back here above that $90,000 level once we are losing the 1.5 level here on the Fibonacci extension golden ratio. Then on the on this weekly chart, also here, something that you need to pay attention currently to is that we are seeing, and that is the bullish case technically, a head and shoulders pattern forming. So here with a head and shoulders pattern, also here we are risking to fall to like $82,000 approximately, and then get here one last bounce to the upside that could get as high as $104,000 into that underlying resistance here. And once we get rejected from there, it is downwards for at least a while. You know, I'm not going. I don't think that this will be like an extensive multi-month downwards trend. You know, but for a couple of weeks, you know, it could be a month or two that we just range then between $70,000 and $85,000 before we then get a proper move back into higher, much higher levels past the $100,000 mark. But just to give you a little bit perspective, and again, I think this is like a bear market target. I don't see this happening right now, but like this head and shoulders pattern, if that would play out all the way down to the target, we would look at $35,000 approximately. So right now doesn't look like it that we are going there in the near term, you know, even in the midterm. So, but when I saw this target earlier, when I was charting this out, it gave me to think, you know, it gave me to think that this might be a level for the next bear market bottom. So, and why do I believe that, or how do I come to this conclusion? Because when you look at bear market lows, they usually double from the prior bear market low. So the last bear market low was roughly $16,000. So mathematically, that would put the next one at $33,000. Now, a lot of people, and me included, were under the impression that this is way too low with all the market with all the money in the market right now. So, but we got proven last time also different, where everybody said, okay, like 15, 16K is like done, you know, we're never gonna see these levels again, and then we actually saw that because of the FTX crash once more. So and here, there could be another event breaking something in the market, or multiple things leading up to something that we could see a move like this here, into the 30,000s again for Bitcoin. So again, I want to remind you guys, this is like the absolute most bearish case, if that would be happening. But on the other hand, you will never see again afterwards Bitcoin that cheap, you know. So like 15,000, 16,000 from last bear market, forget about it, you know, this is done. You never see this again, you know. But I'm starting to think, you know, it gave me to think, I was like, okay, maybe like 33, 38, like that range. And I show you here, that range here, like, okay, this here, okay, it's actually even 40, yeah, 33, 40, something like this, you know, maybe we need to rethink, you know, the bearish stance for the bear market bottom, and that it won't be like 60, 70,000, but it will be actually all the way down here. And if we would get down here, so that would be from the top, it would be a 72% correction, more or less. Or here with 40,000, a 68% correction. And this would neatly fit into a bear market bottom. You know, we usually get a 70, 80% drop before we hit a bear market bottom. So this could become reality, you know. So, and like with past history, in bear market bottoms, I start to think that we should not rule this out, that this might be now a possibility. But it's a long way to get there. You know, it was just something on the side that I want to mention, that caught my eye here. Yeah, but definitely something worth to keep in the back of your mind for the future. So let me check here quickly something. Oh yeah, this is really nice. So where would I currently look for trades? So this is something that I want to show you here, and we can go back here, like I said. So like, let me show you. So for a short, there are some short-term potential moves to the upside that we can take advantage of, but this is like scalps, you know. I would only scalp this, not with size, definitely not with size, only small money, you know, and then trade. So but here, this is something I would trade with size, because you're looking at an 18.5% move to the downside. Even if we only go here to like 75, this is like a 13.5% move from $86,300. So this is a short that I would take personally, with a stop loss at around $90,100. So I'm gonna leave this here on the weekly chart as it is, you know. So if we break below that, we're gonna see if this start to play out. But this is what I'm gonna leave here as it is. So another reason why I need to start to lean more to the bearish side on the macro level is because I have mentioned it before, that yellow string here is coming down now into the midsection of the EMA ribbon. And I repeat here myself again, when we go into the midsection of the EMA ribbon with the yellow string, it is really hard for Bitcoin to push past that without substantial pressure breaking through this, you know. So and there is no catalyst right now in the market that will allow us to do something like this. So this is a problem, you know. So this is a problem unless there is like, I don't know, the repo buys go crazy. They officially announce proper quantitative easing, money printing, like proper money printing, these kind of things, you know. And then they say like, oh yeah, we printed 100 billion this month, you know, it's going into the markets. Things like that can shift us around, and eventually that will shift around the market again in Q1 next year. But between now and somewhere around end January, February, I think that will be a really hard pill to swallow to see Bitcoin bleeding here to the downside. Now, if you want to take that short with me together, guys, do this on TapIt, because on TapIt right now you get $4,000 just for signing up. This is a sign-up bonus, guys. You know, that is a sign-up bonus, and also withdrawable. You can withdraw it if you meet the trading requirements to withdraw it. So $4,000 absolutely for free on TapIt with the link in the top of the description, guys. Get all the money that you can get for free right now. You know, see it as a Christmas present, because it was really hard for me to negotiate that with TapIt. But yeah, that's for you guys. Go and get it while you can, because this is not lasting really, really long. You know, I actually have to ask them when it's gonna stop. Yeah, for now I don't know. So it's there. Take advantage of that. There is a link in the description for that to take advantage. Now on the daily chart, also here things look more and more worse for Bitcoin here. So you cannot deny here on the super guppy that Bitcoin is in an extensive downwards trend, and here the $94,000 level, that red box here, is the most crucial resistance that Bitcoin needs to break to turn the whole trend around, that whole downwards trend. So as long as that is not happening, anything else where we move it to the upside, consider this a level to short from, you know. So unless we start breaking significantly above $94,000. So things will start to look a little bit more bullish. Where I start to get cautious on the bullish side will be here when we break $90,500, $600. But before that, it doesn't look good. You know, it looks more like that we keep trending here more and more to the downside. And that is only supported by this bear flag that I had pointed out here the other day. And as you can see here, we are just consolidating sideways. If I move this a little bit to the side, so you see current price action, bearish order block forming. That will lead to continuation to the downside, and the downside is coming basically tomorrow night. Yeah, tomorrow night. In Europe, it will be tomorrow night when this is happening. So, and yeah, then the first target will be here, that green box, and is perfectly in alignment with one of my short targets of 78,350 to 73,640 approximately. So here in that area, I'm gonna take profits once we start breaking here. Like I said, $86,300 there. So once we are breaking here this level, I take a short, and this will become my target. And I want to mention here, guys, you don't need to go crazy on leverage on a trade like that. You know, take like 10x. You know, 10x is enough. You make over 100% on that single trade, you know, to the downside. 10% is more than enough on a trade like that, you know. So I will personally maybe take, I don't know, 15, you know, but something between 10 and 15. I'm gonna decide this when we get there, you know. But this is something that I personally look at. So this whole bear flag can be only invalidated, as you can see here, same level again, around $93,794,000 when we break here out of that bear flag to the upside. Until then, we are bearish. On the 4-hourly chart, here short term, you might see that we are putting in here somewhat of a W pattern in the short term. So, but again, I don't see this breaking here past $91,500. So you get here a short-lived fake out to the upside, and this might be a rejection point, because here's now also massive resistance. If I draw a line like this, where I see us getting rejected and then turning around, going to the downside. So if we are moving up here, this is one of these short-term scalp trades that you can look at right now, where you could, like I just said, take a scalp, you know, to the upside, take advantage of that move, which is like a 3% move to the upside from here, the neckline. Yeah, almost a 4% move to the upside. But this is not something that I would keep holding. You know, I would definitely take my profit here at 91,500, close the position, and then you can technically already turn around, open a short with a stop loss at like 92,700 to make sure, you know, that you don't get stopped out if it pulls a little bit higher before it then collapses and turns around into the interest hike decision. So because that will happen over the next 2 days. If it's going to happen, it's going to happen before the Japanese rate hike. So, but again, the EMA ribbon will be a strong resistance to get above there. And even if we get above there, it will be just a wick, and then it comes back, and then it will start moving lower. on the shorter time frames, 15 minutes chart is already rolling over again. So there was, in the short term, some hope because of that W pattern that you see here right now. But this is already, in my opinion, not happening anymore. Because the stochastic is turning around, RSI is going down, MACD losing momentum, so everything is losing momentum. And telling you that here, $87,100 is currently resistance, which is also the neckline. And we are getting here in, how long? In 2 hours, again, into the algorithmic window of Jane Street. You know, so yesterday we pumped here, but I think today they're gonna dumping it again. Yeah, I would be surprised if they would push it up here today. So because here the stochastic is coming down, and it would make a lot of sense the way that this is going down here, going into the window here where Jane Street is dumping. You know, so maybe short-term turnaround, but then bam, down. On the higher time frames, you get a clearer picture of this. So here on the 1 hourly time frame, it looks like that we're also putting in here that W pattern that could get us here a short-term move to the upside, but on the 4 hourly chart, it doesn't look the same. So if that W would break to the upside and you want to trade this, then you can see here the target would be $88,100. So not a massive target here to the upside. And guys, thank you so much. We're almost 100 people live here right now. Smash up the like button that we squeeze the last 3 people in. 5 people actually, so that more people can see that. And especially if you enjoy this content. So here you see this is a really small trade. And this is only worth a scalp. So if you want to scalp this, you can. But you see here, this is like a 1.16% trade with a really, yeah, so tight stop loss. So my stop loss would be, you can go here like to 86, yeah, $86,560 is the stop loss. So 1 to 2 risk to reward ratio. Oh, something else that I want to mention here, guys, I almost forgot. I have a small Christmas present for somebody that's serious about trading, and it's only for one person only, and then that spot is gone. One person, if you write an email to info@amcrypto.us, has the chance to join my mentorship program for $5,000. This is only for one spot only. I take only one person, and only if you are ready to pay straight away. Don't send me an email and say, oh yeah, tomorrow I have the money. No, you need to have the money with basically 24 hours, you know. So from now until tomorrow, I give the chance to one person to learn from me personally and make you guaranteed profitable for $5,000. So I'm never gonna come and have this price ever again. You know, it's heavily discounted. It's like 3 times cheaper than my usual pricing, guys. I will never do this again. That cheap, you know. So this is my Christmas present, my pre-Christmas present for you guys. If there is somebody out there and wants to learn from me, it's $5,000 instead of 15, only in the next 24 hours. If you send an email to info@amcrypto.us, I will only respond with a payment link. Don't pay, never ask me again. You know, the price is gone forever. That's your one chance. So now let's move on here. So yeah, that scalp trade. You see here, everything is pointing to that, at least on 1 hourly chart, that we go potentially a little bit higher, but we need to break that resistance, that neckline. Only when the neckline gets broken, you get the continuation. On the 4 hourly chart, just gonna have a look here. Looks like we could see a little bit of continuation, but yeah, overall, it's still on the daily time frame, and everywhere else, we are still going lower. Then the liquidation heat map, if you go to the 24 hours, then you see here why we could reach $88,600, because there is the most concentrated short liquidity currently sitting that has built up over the last 24 hours. But then once we reach that, I think there we're gonna hit a resistance, and then we come down here and take everything that has built up below. Because right now it's only like a massive game between market makers taking liquidity on the up and to the downside every single time, you know. So you see here, over there, went up, then came back down again, took liquidity, you know, then went up again, took liquidity, and then went lower to take more liquidity. Now we will go back up here, and then come back down again, and it will rinse and repeat. You know, this will rinse and repeat over and over again, you know, every single time here for a while. Now, if you want to trade with me in this crazy market, guys, also on WEEX, there is still up to $30,000 in sign-up bonuses available, and $800 also absolutely for free. What I recommend you guys is get the $4,000 on Tapbit and get then the $800 on WEEX, both together, you know. So on $400 just for binding your phone email address and downloading the app, $400 for that, really simple. You don't need to deposit anything, but if you deposit at least $500, you get another $400, and then you have $800 for free. Plus, you get access to my private Telegram group where we are still killing it, even in this crazy market, you know. So, and for that, all the steps are in the description of this live stream. So now, when we look at the total free market cap, I believe that since we are below $835 billion, that we are actually going all the way down here to $778 billion. That is a macro support level. I think this is gonna hold, even with that crazy move that I expect around the rate decision in Japan. But it will lead to 20-30% bleeds in altcoins before we then reverse here back to the upside. And for this, I only need to remind you the last time when we had here this crazy drop, you know, how crazy altcoins were breaking to the downside. Then Ethereum also 4-hourly chart, massive bearish order block. This here is also a bear flag. Yeah, a bear pennant. And also here, I believe, so here for Ethereum, I believe we're gonna hit the target. So you see here, the target is $36. So here, 2,660 is a strong support level. I think we're gonna touch it. So when Bitcoin breaks down and goes sub $80,000, Ethereum will be trading here. And in the absolute worst case, we could come back down into $2,400 for Ethereum. So I don't want to rule this out. If here $2,660 is not holding, this is the next level where I expect Ethereum bouncing back to like $2,800, $2,900 to the upside. So also here, if you want to short this, $2,900 is the level from where you can take that short. That's what you need to look out for. Guys, let me know in the chat. Do you have any coins in specific that you want me to cover here for the short term, long term? Let me know in the chat, and then I'm about to leave again. But yeah, let's do that quick. So I'm gonna wait here, and in the meantime, look at Solana. Oh, well, what happened with my Solana chart? That doesn't look like my typical Solana chart. I need to refresh this here. Ah, okay, there we go. There we go. Also here, yeah. Still established downtrend on Solana. Here you see this is the downward sloping trend line on a 4-hourly chart that Solana needs to break to get here a short-term bounce and a strong move to like $140. So this is a long that I would be potentially looking at for Solana. Break here above $128 and then trade this into $139.56. Stop loss here, previous 4-hourly kind of low. There's your setup, 8.71%, and that can happen quickly. And I believe when we come up here, it will just wick. You know, we'll wick up here, then come back down, and then go lower. Oh yeah, that's a good one. I actually still have a chart open here for XMR, so I still have that chart open. Also here, I need to. Why do I need to refresh all my charts to get here my lines back? Ah, okay, no, here I actually do not have. So XMR, really interesting. That looks like it is about to run like crazy to the upside, because XMR is one of the few coins that has a lot of bullishness right now, and you see on the daily chart this massive W pattern. It cannot get any cleaner than that for a W pattern. So then once we break $435, it's gonna send. It's gonna send here to $538 and even past that. So I see here like $600-700 for Monero in the midterm, not in the short term, but in the midterm, because I think even the weekly chart, yeah, so even the weekly chart will turn around this week and start to look even more bullish. So, and here that all-time high, I think that all-time high will be taken out with next week's weekly candle. Not this week, but next week. Could still happen this week, but I lean more to next week that this is gonna happen. But yeah, so here you have a good opportunity to long this once you break $435. And even if you just go to the target here, 538, so there's like a 24% move. Your stop loss, previous daily candle, 1 to 3.57 risk to reward ratio. Now, yeah, you cannot say anything against that. It's a really, really good risk to reward ratio. Yeah, and that would be my next trade here for Monero. So I would personally trade this, you know, so I would trade this myself. I was trigger happy yesterday at $406 and did not do it. You know, I was like, I don't know, was not looking too good. You know, I was like, should I not? Should have done it. You know, would have been up almost 10% now today. Any other coins, guys? And then I'm gonna run again. Let me see here. Oh, actually, no, we're already here over 30 minutes. So I actually gonna start running now because I have to do some other stuff for you guys. There's so much more content coming out in the next coming days. Should definitely keep your eyes peeled for that. Because I have never seen me doing that kind of content. So yeah, so watch out, have the notifications on that you're not gonna miss out on this. But guys, thank you so much for tuning in here today. I know things look tough right now in the market, but better times are still coming. You know, the super long-term outlook has not changed at all. You know, we're talking about like a month or two where things are still hard, and then it will get better. You know, then it will get better again, and you're gonna see sentiment shifting once more in the new year. But yeah, that's what I have for you for today, guys. Don't forget, smash the like button, hit the subscribe button, hit the notification bell, and I'll see you again tomorrow.